Hey, all right. Welcome, everybody. Thank you for joining us from all around the world. It's great to see such a great turnout. Love the fact you're chatting in your location, where you're tuning in from. That's pretty cool. And I think it's all good. Getting a little feedback from somewhere. I'm not sure where it's coming from, but we'll get that fixed up here. It is. Somehow my laptop is acting up. But listen, thanks everyone for joining us. There we go. We're all set. We're ready to go. It's Saturday, November 5th. We kind of finished the week on a little bit of a positive note, but purpose of the opening of our presentation is to really drill down and see what the market has been doing and where it's likely to go in the next little while. So we're glad to have you with us. Look forward to your comments in the chat as well. And you can see we're here with Dr. David Paul from the UK, and he's going to give us his take on the US and the UK markets. And Mr. Glenn Tompkins, senior instructor with VectorVest and one of the Jockey Club leaders who helps identify trade ideas every day, and he's going to share some of their tips and trade secrets today with the methodology that the Jockey Club uses. It's a rapidly growing trading room, and a lot of folks are involved in that. And we thought we'd like to share some of the tips that they follow. So just going to click along here with my screen. Just keep in mind the replay is going to be on YouTube. So it'll be available to you just as soon as we finish our presentations today, and the slides will be sent out by VectorVest on Monday afternoon. So we'll do our global market presentation with a bit of a forecast as far as we can go, and we'll have our keynote presentation, Jockey Club Trading Insights and Strategies to End 2022 Strong, and that's something we all want to see happen. So thank you, Glenn, for giving us your Saturday to share your information with us. We really appreciate that. Nice to see such a great international audience. I'm just looking at the names coming across and where you're in from, and I recognize so many of you from these forums and from my workshops in Canada. It's great to have you with us. Just a quick risk disclaimer that'll cover our presentations. There is risk in investing. And of course, everything you will see in here today is provided for educational purposes only, should never be considered investment advice. Our goal is to teach you about the VectorVest program and give you information designed to empower you to make your own investment decisions. And these decisions are yours and yours alone to make. All right, I'm going to start a little bit different this month. From previous months. There's just so much headline news. I think we're all aware that we have an election next week, on Tuesday in the US, that's going to have potentially a big impact on the market. But even aside from that, we had a pretty good week last week overall. World shares rise on hopes China's zero COVID policy is easing. That was the headline up in the left-hand corner. Chinese officials signal no change to zero COVID policy. That was the headline today, about 2 hours ago. So who knows what that'll bode for next week. But I think for petroleum, for some of the other consumer sectors, last week things were optimistic about what China was doing, and they've kind of downplayed that in an announcement today. Natural gas forward prices sharply higher as weather models are starting to show a real cold winter. So U.S. natural gas futures jumped 7% in a volatile week. And if you have real-time or intraday, you can put on a performance graph any stock symbols that represent natural gas. I've put on a Horizons ETF for the bearish side in red and for the bullish side in green. This is a 5-day performance chart, and you can see the last day was turning positive, and it has been kind of coming that way for a little bit of time. So it's just something to keep an eye on. There's other natural gas companies that are drilling for natural gas, and you can watch those as well. Something one of our longtime subscribers near Edmonton pointed out to me, some of the headlines relating to developments in nuclear investments. And in Canada, nearly $1 billion nuclear investment. Uranium market share futures are up, according to MarketWatch, and then investingnews.com. Prices have broken out. I looked at some of the graphs. They haven't broken out that much by the individual stocks, but it's something to watch. And these are some of the stocks. Cameco, of course, in Canada. Denison Mines in the U.S. DNN, a very popular stock in the U.S. So just some symbols to keep an eye on going forward. And then, of course, interest rates. We're all following those very closely. In Canada, the Bank of Canada raised the rate just 50 basis points, which kind of was the expectation, or at least the hope anyway. But on the U.S. side, the Fed went back to the 75 basis points, and the market kind of expected that, and so there was a bit of a rally. And then Chairman Powell came on and put the damper on things and set that hawkish tone in the afternoon, and that caused a little bit of a pullback. Just on individual stock news that maybe impacts people like me that have a used car they would like to sell. Carvana stock drops as the used car market gets better for buyers, not as good for sellers. And so here is on the right-hand side, you can go to the industry viewer in any of our countries, but particularly I noted US, Canada, and Australia here, and go to the mining uranium. You can see it's pretty far back in the industry group list, 168 in the US out of 222, 80 in Canada out of 122 industry groups, and just 44 industry groups in Australia, and uranium is in the precious metals, minerals industry group, sitting at about 38. So it's a good idea to put your industry group on a graph and watch that RT ranking, the relative timing, and if it starts to make a move higher, there could be some good opportunities coming. Just checking to see if there's any questions or comments about that. Looks like everybody's really good, so we'll just keep going on that. I wanted to do a quick poll, as we are going to be kind of looking at the markets and trying to do a little bit of a forecast. And so I wanted to ask you if you would type a 5 if you believe the stock market is going to finish substantially higher between now and the end of 2022. Type a 4 if you believe the stock market will finish somewhat higher between now and the end. And type a 3 if you think the stock market is going to finish substantially lower between now and the end of 22. And a 2 if you think it's just going to be somewhat lower. So I'm kind of checking the chat here. I see a 5 from Marty, Brian a 4. Now they're coming in fast and furious. I would say so far mostly 4s coming in. Tom is a 2. So believing the stock market will finish just somewhat lower. Not too many 3s, so that's the good news. And maybe you could give me a reason, if you're a 3, why do you think the market is going to finish substantially lower between now and the end? That would be kind of interesting. Tom out in Burlington is a 3. Brian from Calgary a 5. Nick's a 3, Brian's a 2. You can see the chats there. And Marty says 4 if the Republicans win with more of nothing getting done. I guess that's kind of a political view. So we'll try to stay away from that, but certainly everybody's watching the elections here very closely. Yeah, and VectorVest says the news is all negative, 40-year recession high, interest rates have a way to go, and that is from our friend Glenn. So there you go. So lots of volatility is expected. Thanks everybody for your feedback on that. That's awesome. All right. All right. Before I get into the graphs, I just want to share with you, planning is well underway for the 2-day extravaganza in Tampa, Florida. It's January 6 and 7. You can attend in person. It's a VIP experience, and there is a special bonus rate offered right now, just $195 to attend in person, meet the instructors, have meals with the instructors, and be able to ask questions at the breaks and live. So it's a great opportunity. You can go ahead and go to vectorvest.com/Tampa. That'll get you a kind of a seat in that in-person event. Now, if you prefer to attend from the comfort of your home through live stream, that's going to be available to you as well, as we did last year, and you can register for free. So you can go ahead and click on vectorvest.com/stream and register for free. That'll get you in there as well. And when you go there, you can read the information and see the agenda. It's a little bit dynamic at the moment, I'm sure, but the setup is pretty well set. And hot off the press is the enhanced trading system. It's the near perfect indicator system, but I have to say that the educational team has really ramped it up and is going to reveal that in Tampa for everyone. And the equity curve looks just like this, which is pretty fantastic. So look forward to that. Attend in person or attend the live stream, and you can see it running firsthand. All right, to the markets very quickly here. Year to date, the numbers are still woefully awful. You can see in Canada still down 17.29%. Color guard is neutral. We had 3 yellow lights across the top on Friday at the close. Notice the buy-sell ratio did kind of peak up a little bit, 0.22. They were still near to the bottom fishing level of the buy-sell ratio, the historical benchmark of 0.20. That's for all of our countries. But notice the MTI is starting to move up, 0.80, even though it fell a little bit on the week. We're still in that trending phase of the market. Primary wave is down, confirmed call down, and there's a bullish divergence between price of the VectorVest composite and the BSR, and that suggests that upside potential may outweigh downside risk. Just keep your eye on the color guard next week, because a lot of people are chatting in just how volatile everything has been. And in the US side, and David will cover the US in more detail, but still down 21% year to date. 3 yellow lights across the top. Notice the buy-sell ratio has managed to get up to 0.41. Pretty big day on Friday from a down day on Thursday. So a big move on the buy-sell ratio. Smaller move on the MTI, but it was moving up. And again, this is from the strategy section. I recommend you always read the strategy section. And red lights entered the color guard this week, although the market rose today. All 5 one-day Derby searches were bearish. So just be aware of that. And here's what's sort of happening in all of our countries. The UK was the only country that managed to get a small win over the month, the monthly gain loss of 1.57. And you'll see as I scroll over to the right, the UK actually has a confirmed up call. So that's good news for the UK. And it is a trending market with the MTI at 1.03, buy-sell ratio. We're at 0.63. So things are looking better today. It's interesting in the UK. In Canada, we need price to get above the 65-day moving average. In the UK, as long as price is higher for 2 consecutive 5-day trading periods, higher than the previous day, and the MTI above 1, you get that confirmed up call. So we're quite a ways away from that in Canada. Europe still down, but there is a bullish divergence suggesting upside potential may outweigh downside risks. So look for that next week. Buy-sell ratio 1.02, very, very strong, and the MTI in that trending phase. In Australia, down 15% on the year, but primary wave is up, a nice green light with a star in the price column indicating there's momentum building on price action in Australia. Buy-sell ratio 0.23, and but nevertheless, just a word of caution again, with uncertainty and volatility still surrounding the market, best to proceed with caution. So that's the overall look at our color guard reports in all of our different countries. And typically, just like an industry group, when an industry group is rising, seems like most of the stocks in the group are rising. And when the market is starting to turn over and get a little bit more bullish in our different VectorVest countries, then we can start to get a little bit more optimistic. Caution still advised, but a little bit more optimistic. I like to show the emotional market cycle in my weekly Q&As, and you can Google emotional market cycle and get, probably 1,000 iterations of this. But we had VectorVest place it on a MTI graph for us, or a template for us, so we can see that we've gone through the blast off phase with the MTI, Canada and the US. We're sort of entering that trending phase up here. And when we get up to these higher levels of the MTI, 1.3 and above, that's the greatest risk of loss. So we want to be careful up there, raise some cash for the next blast off. Right? You can take a look. We've really come a long way since our forum last month. Buy-sell ratio was at 0.05 in the US. We're now at 0.41. Canada, we were at 0.08. Now we're at 0.22. So things are looking better. Still getting people chatting in 2s and 3s and 4s. So that's pretty good. SendReb, if you're not getting the slides from VectorVest, you may need to send me an email, stan.heller@vectorvest.ca, and my email will be on the last slide when we go through here. But send me an email if you've never received the slides. We may need to make sure they've got you on the list. In Canada, I'll just cover the Canadian market a little bit more, but you can see we've been in this lengthy channel really since the beginning of 2022, and it's been fairly consistent. We start to see primary wave up when we come down to the bottom of the channel, a few opportunities to make some good money, and then the fall back. So here we had a primary wave up and then a retest of the support area, and then we had a good rally, but we haven't been able to get above this 65-day moving average in blue or the upper trend line, and sure enough, we got a primary wave down signal. So caution is advised, but we did get a rally off of this bullish divergence with the MTI rising and price falling, and actually the buy-sell ratio and RT all showing that bullish divergence back here. So to prepare us for a little bit of a rally, but it just can't get above that resistance. And there's the 1-day and 5-day winners. Just be aware when you look at, we drill down on these, most of the stocks in all 5 strategies are the gold stocks, the miners. The miners lifted the Derby winners on Friday. So just looking at the top Delta industry groups, actually it's not September 30th. Oh, yeah, no, it's not September 30th. It's November 4th. But you can see petroleum is dominating. On Tuesday when we had our Q&A, 19 of the 20 stocks in the top VST stocks were all petroleum. So if ever there was a time when you might consider overweighting, you might want to overweight the industry groups that are near the top of your list. And I'm not suggesting you go, really overly heavy, but these are the stocks that are lifting the market in Canada for sure. All right, and then just to recap, in September at our international forum, I covered my essay that week that, you know, there were some companies on sale. Kind of noted that we have two watch lists in Canada, the WOW Dividends and the WOW Value and Growth, and we had some additions to that. So I suggested we really watch those stocks a little bit closely. The US has a WOW watch list as well that's very popular and generally shows some very good stocks. But here is the quick test. Actually, the stocks in green here at the top are highlighted are all the ones that were identified in the value and growth watch list, the new additions, and 8 out of 10 did go up from last month when we had our meeting. And the top 10 is sort of outlined here as well, and they did quite well. All right, so just a quick review, and in Canada, we've got the new newsletter format. Europe, Australia, and UK have had it for a while. The US will be next, but at my Q&A, a lot of people mentioned they really like the new format, more informative, user-friendly, and I'll just quickly go in and show you what that looks like. And just get my program here. Okay, I've got maybe too many monitors going here, but anyway, let me see if I can do it now. Okay, there we go. I went the wrong way. All right, so just from the home page, you go to the Views tab, and on Fridays, you'll see Top Stock of the Week here, which is the title of my essay. And then you go forward from there. Let me go to the Views home. So this is what it looks like when you first go there, and you'll want to click on the headline below the weekly newsletter. So you'll click on the headline, and that'll start to take you through. And the huge advantage that our members noted is the graphic design, the ability to add images. NVA was our top stock of the week, so I highlighted that in my essay. This is what it looked like in VectorVest at the bottom of the views. They show sort of these gauges or dials with RV, RS, RT, and VST. And so I included a little write-up about NuVista. We added it to our master retirement watch list, an exclusive for VectorVest Canada. And we added it on October 11th, and it went up about 11% in just 4 weeks. So it was pretty good. And here's why I say it's always important to look at the industry group graphs. This is a weekly graph of the NuVista industry group, which is petroleum, Canadian, exploration, production, 3-year weekly graph. I love it when price gets above the 40 period moving average, either on the daily or the weekly. That happened on October 19th. You can see that the RT ranking was starting to move up, and these stocks started to move up. And of the 62 stocks that were in that industry group on October 19th, the average gain was 569%, 52 winners, 8 losers. So very important. And I'll just very, very quickly go in Canada again and show you where that is. Okay. Let's make sure that's showing. I think, there we go. So again, you would just go to the Viewers tab. I typically start with the sector. There's petroleum today. It's right at the top. Double click on it. You get all the industry groups in the sector. There's Canadian exploration production. And now I can right click on it. I can view the stocks in the industry group to see which stocks are at the top of the list right now. I can view the stocks in the entire petroleum sector, the business sector, and I can view the industry graph. So that's what I'm going to do just to show you that. And I've got the near perfect indicator on here, but also I've added the RT ranking. I just want to show you how to add the RT ranking. Come to Add Parameter up at the top right in your graph layout menu. click on capital appreciation. And whoops, I got to remove it. Let me remove it. Add parameter, capital appreciation, RT ranking right here. So it comes onto your graph, and now you can see which stocks or which industry groups are outperforming other industry groups. I love that feature in VectorVest. All right. Bill's asking, would it be prudent to wait for the NPI to enter into before entering into the New Vista stock? Yeah, I mean, that's always a great time to enter, Bill, is when it's just sort of ramping up. It was sort of crossing right here, and the 40 moving average of RT was rising. 5 moving average of RT was hitting higher lows. Great entry point at 12.25, and it's up to 13.97. So that's a really good entry for sure. Now it's moving up pretty nicely. It's I would wait for it to overtake this overhead resistance here. If you don't own it already, might want to wait for a little bit of a pullback on it. That's the only caution I would have. OBV just shows increasing volume overall. So kind of forgot I had this on the layout here, but I do like to look at it, see that increasing volume when price is rising. That's the purpose of that, Terry. Phil says, when the data is changed in the views, the home tab does not display data for the earlier date. You can navigate back and forth, Phil. So I'm just going to show you that because it's coming to the US as well, and might as well be aware of it. So you're on the views, and I can scroll back up and notice up the top left here, there's a little button or tab that says Views Home. So I can click on that. And now I can click on the headline. Here's all the previous days, all the information that we always got in the views on a weekday is here under these headlines. You've got your calendar over here on the left. You can click on any of the dates to go directly to that section. You've got your resources to show events and webinars, the links to the special presentations, the essay section showing you the essays, special reports, market calls. You can find out all the dates for all the confirmed up and down calls or whatever, if you like the DEW, easy way to track them there. So a lot of great information. We haven't really lost very much of the information. It's all there. You might have to do a little bit of navigation. In some places, the market climate is enhanced in this way, evaluation with a graph. And then if you want more detail, it's there as well. Did I skip by it? I think I did. Oh, there we go. So we got our truth chart. And if you want to see the actual indicators, just click here. And there's your inflation, interest, earnings, all the details. All right. Yep, it's already, Paul's asking, is it coming to the other VectorVest versions? We already have it in Australia, UK, Europe, and now Canada, and the US, I'm sure, will be coming soon. All right. Edward, on the NPI tools, what you're going to see if you attend the Tampa 2-day is an automated trading system using the NPI on the long side to get those results. And I'll come back to that Tampa invite screen again. All right, and I'll chat it in as well once David takes over. All right, I think that was it for me. Global market ETFs. This is on the US market in the cherry picking watch list folder, and notice Poland and Mexico, Peru, or, you know, when we ran this scan last month on September 30th, all the 10-day price deltas were negative. now at least we've got some positivity going on. Glenn will let me know if positivity is a word or not, but I think it is.
It's positivity. That's a Glenn.
Positive. We have some positivity going here.
There you go.
Poland and Mexico and Peru. Thank you, Glenn. And then the market sector, also in the cherry picking folder in the U.S. Oil, energy still up at the top, but the industrials are starting to gain some ground. You can see the positive numbers here, percent gains. Biotech's even up 6%. Utilities starting to make a move, and financials. So just a really good idea to, it takes just a minute to go to that watch list. It's a cherry picking folder and just see what's happening with sectors and the global market ETF. I'll just pull it up here, make sure everybody's aware of it. There's so much great information in our watch list. So we just click on the watch list tab and we'll scroll down to the cherry picking folder. There's your global market ETFs, all ranked by VST. And there's your sector ETFs right there as well. All right. All right. I think that was it for me. So once again, and Edward was asking about Tampa. This is that 2-day investment seminar. It's the longest running seminar that VectorVest holds, and always some new techniques and ideas and trading systems, and this will be no different. It's a very special bonus for our attendees to the International Online Forum. If you want to attend in person, it's just $195 this weekend, so a very good reduction on that. And if you want to attend live stream, you'll go to vectorvest.com/live stream. You must register to be able to view the live stream and get the slides, so you'll want to do that. And this is what that equity curve on the new near perfect goes ballistic trading system. All right. So with that, I'm going to call in Dr. Paul for our US and UK market update. So David, if you're there, welcome and thank you for giving us your time.
Thank you, Stan. Let me see if I can share the screen. Switch the camera off for a minute. Share the screen. Can you see my blue screen there, Stan?
I'm not seeing it yet.
I got you.
Okay, all right. So,
all right.
Well, okay, guys, with the IT behind us, we can make a start. Good afternoon, everyone, from a very wet and windy West London. It's a great pleasure to be here. I'm going to do my best to run through my little bit as fast as I can, so we give Glenn plenty of time. The first thing I have to do, pretty much for UK listeners, is that, as you guys all know, I'm qualified to give financial advice, but I can't do so because I haven't sat down with you and done a long and a detailed fact find to ascertain your stomach for risk. I'm allowed to talk about shares that I hold myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on. I came across this. I'm selling a bit of property in South Africa at the moment, and my son has been clearing out the debris, which is mostly books, and he sent me a lot of stuff from one of my technical analysis heroes, a guy called Richard Wyckoff. And Wyckoff, in fact, wrote in 1932 that 3 men came to Wall Street. The first always knew what was the best buy. The second fellow knew why it was the best buy, but the third fellow knew either of those things. He only knew when to buy, and he made the most money. And I think that sort of goes along with Dr. Alito's famous quote that the most important thing to know is whether the market is rising or falling. Everything follows from that. And I keep preaching to the UK people that market timing, knowing whether the market is rising or falling, is 70%, maybe 80% of the exercise. And that's why I spend so much blessed time on it. So we're going to start with the US market. And I think Stan is going through this, but if we blow it up and just have a look at the color guard itself, we have a down situation. The MTI, as Stan has said, has climbed over the last day or two, but it hasn't been able to get up above 1, and thus the second word is down, and the first word is down, so we're in a that's the primary wave is down, so the short-term trend is down, the underlying trend is down, and we've got a confirmed down. The only one that's not down at the moment is the DEW, which I'll get onto in a second. So VectorVest does not advocate buying stocks at this time. I have a few positions, but folks, it's not a time for long fishing trips, that's for sure. So that's the US market timing chart. Since COVID, that's a weekly chart. I've included my 8-bar stochastic, which is a weekly 8-week stochastic, and it produces some fairly good signals. That where the price was falling and the indicator was rising, that was saying that I want to fall some more. That's the thing called reverse divergence or a slingshot. As you can see, there's a powerful level of support right around the COVID highs. This little bit of a jump up here, that was, believe it or not, I don't know whether you can see my thing or not, I put it, that was the Pfizer vaccine that caused that jump up. And we're sitting around roughly at these levels, and we're pushing up and pushing up quite nicely. Let's have a look in more detail. So the conventional VectorVest measurements, that's the longest term one, the confirmed calls. The confirmed call in the US is a function of 2 weeks movement plus the buy-sell ratio moving above 1. The buy-sell ratio still got quite a bit of work to do to get above 1. It's risen a little bit, but it's got work to do. It's notoriously non-linear. In other words, if the market moves, it can move very quickly indeed, but it's still got work to do here. There was a little bit of divergence here, as Stan pointed out earlier, where that is flat and this is rising. It's not great because it's only over a week or two. The longer the divergence, the more significant it becomes. That divergence was much more significant than this one because the number of days between those two bottoms, and the first person who taught me about divergence was a guy called George Lane, who invented the stochastic, and he reckoned that if there wasn't 13 bars, that the divergence was insignificant. Anything less than 13 bars wasn't worth bothering about. As you can see, the MTI is turned back down again as the market has started to fall. So there seems to be a bit of noise coming in the background there, folks. This is the DEW, and the DEW gave us a buy signal down around this area. And as you can see, there's that same divergence between the price and the detrended price oscillator, which makes up the DEW. So the situation is short-term trend is down, the underlying trend is down, we've got a confirmed down in place, and the medium-term market timing system is up. So let's go a little bit further. That is the primary wave. It's given some magnificent signals recently. And in my S&P 500 trading, which I do for a living, I like to take my trades in sync with the primary wave. I was short of the darn thing yesterday, and that was in sync with the primary wave. Sometimes I trade against the primary wave, but I would say 80% of my trades on the S&P 500 are in sync with the primary wave in VectorVest, and that's helped two things. One, it's made me more accurate, hit rate is higher, and secondly, the risk to reward is significantly higher. Joey, there seems to be somebody in the background. Am I competing with somebody in there?
My mic was off, so it's not me. Stan?
And my mic is off as well.
All right.
I'm competing with some gibberish in the background there. I really don't know what it is. Let's go to the S&P 500, folks. The S&P 500, in fact, closed the week with an outside week. That's not so good. As you can see, we've got this big level of support. Support is rarely one number. It's sort of a level on the chart. So we got resistance here again. That was that Pfizer announcement. And we're now sitting down around that level. Very, very important levels. And ladies and gentlemen, there's a great deal of fresh air below these levels. A great deal of fresh air below these levels. So just be careful, very careful indeed. Now, I did a video, and VectorVest sent that video out last week, and that was my summation going into the Fed last, whenever it was, Wednesday, I think. On the way down, and this is over the last few weeks, 3 months, I think. On the way down, we had 5 clear waves and down to this low. And then that was the bounce. That's where we got the MTI divergence. And now we actually moved up here, and we moved up in a classic bear flag. Now, some people called, some associates of mine called that a bear flag. Some people called it a rising wedge. It's not a particularly good rising wedge, and the points are not coming together. Nevertheless, I was convinced in that video that I did that the Fed would cause the market to fall, and that's pretty much what happened. Now, this little pattern inside here is interesting because it's what's called a pop gun. And I've never seen it anywhere else apart from your humble correspondent. But if you get a bar, and you get an inside bar, and you get an outside bar, that's what we had just here. And it's called a pop gun because when it goes off like the clappers. Now, it is an energy pattern or a volatility pattern. And if you remember your high school physics, at school, a vector has got size and direction, whereas a scalar has just got size. And this is just pure energy. And unfortunately, the pattern itself on its own doesn't predict which way it's going to move. But at the heel end of a 5-wave flag pattern, I felt that was going to come down with a great deal of style. And that's exactly what happened. I think that we're going to move up into next week. And I'm not sure where we're going to move. We could actually have another wave up here, but I am pretty convinced that before this over, we're going to have another push down towards those lows. So we're not out of the woods yet. We shall see. We'll trade the market as it comes, not the bloody forecast. But the chart to me looks as if it needs to tackle down around these lows once more. So that's this is a free bit of software I get from the broker. That's the overnight market. And the overnight market, this is an hourly chart. And the hourly chart has suited the volatility tremendously. It's been taking sweets from children recently. But this was a great move up. I managed to get this move based, see the flag? And that was in the UK Q&A, and I was long of this in the meeting and was distracted and got stopped out there. Now, that's the Fed decision, which I didn't trade. I leave that to somebody else. It's so easy to get the direction right, but the spike takes you out. I got that little bit, but that spike was exactly 78% of that range to the tick. So the smartest people in the universe, that's where they had the orders. And that's if you do want to trade the Fed, folks, a characteristic of the Fed meeting over the last year has been it moves up against the or down against the big move for about half an hour before it actually goes the right way. So that's exactly what happened. It moved up here. sat up there. And as Stan says, that's when the chairman of the Fed started to speak and pushed it back down again. In terms of the jobs report yesterday, the jobs report came in significantly ahead of what was expected, and I can't see anything in that that's going to cause the Fed to slow down, on both sides of the Atlantic, certainly in the UK and the US. The jobs market is strong. I don't see them backpedaling myself until that jobs market shows some sign of wear and tear, and it's not showing anything at the moment. Now, on Friday, we had this classic pattern: 1, 2, 3, 4, and 5, and then we had this classic A, B, and C up to here, and that's was a 38% retracement of this. My dear friend Larry Pesavitis, who's a Fibonacci expert, is one of my best friends. He's from Phoenix, Arizona, and he would have been short there without a doubt. But I didn't have the same testicular fortitude as Larry, because I waited. This was the open, and then it moved down, and then there was a little inside bar on the 5-minute chart below the 21-bar moving average, and I took that bit out of it yesterday afternoon. If I had more testicular fortitude, Glenn, I would have traded this up, but I didn't, and I was tired at that stage as well. So this was a very, very strong close, and I think that we'll probably trade up on Monday, and we could actually move significantly higher up to about there, and that will be probably 78% of this. If I was a betting man, that's where I'd say it was going to go to. Okay, so I had a few positions in the US, and I got stopped out of Clearfield. I was long from that high. And it went up. I took off half, got the stop to entry, got stopped out on Friday on that damn thing. So I have just 3 positions left. XLE is going well. The GDX is hanging in there, and Shockwave is living up to its name. Now, Shockwave is a tiny little company. As you can see, earnings per share are rising strongly, and it's growing sales at 100% a year. It's got some contraption that if you've got sort of blockages in your arteries, they pump this contraption on and it vibrates the little buggers, so they come out naturally. So it saves putting in stents and all those ghastly things. I bought into it just here, so that's underwater a little bit, but I'm still very positive. As you can see, it actually stopped exactly at that low, so that's a very speculative trade. First objective would be that. I thought we're well on our way to it here, but it didn't happen, and the next objective would be there. So and that came out of a very aggressive search that I run. High RV, reasonable RS, huge growth greater than GRT greater than, I think, 30%, and sales growth greater than 50%. So if we now move to the UK, well, the UK had a great day, and that's largely on the back of China. China reducing COVID restrictions, and the big miners, for example, which are a big part of the UK market, caused the market to go up. Anglo-American, for example, up 11% on the day. And that's what has precipitated this run in the market. And now we've got this confirmed up in the UK. So if we have a look, there's the goal. The MTI is greater than 1. That means that second word turns to up. So when the MTI is greater than 1 and the market's risen for 2 5-day periods in a row, we actually print a confirmed up signal. So short-term trend is up, underlying trend is up, the DEW is up, and we've got a confirmed up. So for once, the UK is leading all the trips into battle. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Again, the 8-week stochastic showing there's plenty of room on the upside here. And that is a very similar position to the US. And you can see this little small bit of divergence here, which is push. I was suspicious of that on the whole way up. So time will tell as if this is going to be the bottom, or whether this is in fact another move like this. And I shall be, in fact, treating it like another move like this until it proves itself to the contrary. I would like to see a nice rising bottom. Mr. Gann said in his book, Wyckoff repeated it, that the safest place to buy was after the first rising bottom. So I shall be treating it like that until it actually breaks above that top. But nevertheless, there's the DEW. DEW moving up strongly, again showing that little bit of normal bullish divergence. And that's the primary wave showing, a nice move up here. All the signals have been really good on this. Maybe there was one signal that you would have lost a bit of money in, depending on your exit rules, but the rest of them produced some great spread betting signals, short-term signals, that is. We have a thing called spread betting here, which is essentially, apart from the legalese, a futures market. So I'm holding those positions, folks. Monday afternoon, we'll have a Q&A. I'll go through these all in detail. Glencore. Clearly, there was a bit of noise this week based on a big fine that they have to pay. Bloomsbury is going well. Plus, I bought into 4Imprint. I bought into on Thursday. I had a big move yesterday with really, really good numbers coming out there. That was a sitter. SLP I'm holding on to. Greencoat I'm holding on to. And I've held on to Tongela. It was on death watch. And maybe it still is on death watch. But that's Tongela. This is a coal mine, South African coal mine. It used to be called Amcoal. And as you can see, it's pulled back to the tick, to that 78% retracement, to the tick. A classic 5-wave flag pattern was accumulated strongly. It wasn't a hold, so it was on death watch. My stop was under the 78. And with any luck, this period of pain is over, but still need to keep my eye on it. As you can see, significantly undervalued, growing earnings strongly, and the only barrier to achieving what it said it's going to do is the South African railways, i.e. getting the coal to the Richards Bay terminal. Now, I'm going to talk very quickly about commodities, and that's the euro. Way back since 1999. Can you remember that far back, Stan? 1999. Market, here's the euro. I traded every bit of this, folks. Every last little up and down of that. I don't trade the euro anymore. I just focus on the S&P 500. And it's come back to 78% of that. Now, it is my feeling, folks, and I don't want to upset the Americans listening, but this run in the dollar is getting very, very, very mature. I still think it's got a couple of months in it yet, and probably another leg of strength in it. But moves like this correct savagely. They don't correct by going sideways. So I would expect over the next 2 to 3 months some market weakening of the dollar. It'll probably take into January before it happens. This is the weekly chart of the euro, and it's probably going to break down. Another leg down here before this is over. But sooner or later, this thing, and when it does turn, it's going to move very sharply indeed. I've been watching these trends forever, and trends tend to go on longer than anybody anticipates. But a strong trend like this one rarely corrects by going sideways. They correct by falling apart. All right, so and that unfortunately has to happen before we see a noticeable turn in gold. The euro went up strongly against the dollar yesterday, and gold went up strongly as well. I found the gold market very difficult. I think Stan pointed out that in those searches that he looked at, or winning performance, they looked at the raw gold mining stocks, and Stan, most of that was done in the one day, i.e. yesterday. My 8-week stochastic is showing a treble divergence, and I would expect a push up here, but I still think that the euro has got a while to fall, and the pound's got a while to fall against the dollar before we get a turn. That any turn is a couple of months away. I'm holding the GDX. GDX, as you can see, being accumulated. Surely I've convinced some of you that the 78% retracement is worth looking at. That's the 78% of the GDX going back to the COVID low, and a market sitting exactly at that level, being strongly accumulated at the level, and that's the 21-week moving average. It's still below that. Stan mentioned the 40-week moving average. 21 I like. 30 is used by an awful lot of people. Clearly 40 is going to be more confirmed. Still got a bit of work to do, but I'm holding that long position. We shall see. Copper had a great day on the back of China. Okay, that's the best day in copper that on the long side I can remember, and that's pushed. This is a UK investment trust, and it's run by BlackRock, and it's got all of the usual suspects in there. So it's got Rio, it's got Glencore, it's got Anglo, Newmont, all in there. It had a really great day, and we were stressing for the last month of Monday afternoons around this level, because as you can see, that would have been a head and shoulders reversal with a target somewhere down here, but it seems to want to break up now. If this news from China can be maintained, then we're going to see a really, really strong run in this, and we could get up to that level, which would be really, really nice. That's been a great share, and I think everybody in the UK has done exceptionally well out of that. Oil, well, oil moving up again, stopped at the 78% retracement after a 3-wave pullback. Took forever to turn here, and moving up, very strong day, and I think now that this has only got one way to go. Oil stocks should do exceptionally well. This is one of my better ones. I've been long of Shell since down here at about £11, and it stopped at that 78% retracement for 1, 2, 3 times, and it broke on the 4th attempt, and at £25 after an outstanding set of results. Big dividends plus paybacks. The dividends, of course, are the problem because the government wants to tax them, but nevertheless, this looks well on its way to this long-term high here. So that's just been great. Many of our customers have been in Shell. Many in the UK have been in smaller oil stocks, and they've got a much bigger percentage move. But Shell has just been fine for me. That's the XLE. Going really nicely. As you can see, it's now camped up at that 52-week high, and we bought into this on October the 4th, just about there. It breaks, goes back and kisses. So when you see an obvious resistance line, folks, it rarely pays you to chase. Normally, they'll come back and kiss. And as you can see here, we got a couple of inside bars. Always been a great place to got in there with a really tight stop underneath the inside bars. Inside bars make great entries with the trend because the risk associated with them is so small. And there's natural gas pushing up. The seasonality for this really good. And as you can see, there is a line in the center. I thought the 78, this one time the 78 didn't hold because it held there for 3 weeks and then it broke to the old bottom. Now it's pushing up strongly. And we have a customer out in Oxford who would shoot me if I didn't put up Serica. That's Serica. It's a natural gas play, as you can see, growing earnings strongly, undervalued, has pulled back. 1, 2, 3, 4, 5 waves back. Not a pretty flag, but it's pulled back to this confluence between the trend line and that 78% retracement. Paul, if you're listening, that looks as if that wants to go strongly. It's still on a sell, folks. If you're using the near perfect indicator, the near perfect indicator's got a way to go before it gives a buy signal. That'd be a good entry point. And there is a overlay or a template preset on VectorVest for the near perfect indicator that you can use to get into that stock. It's also still on a sell recommendation, but just need to wait here and be patient. So as Stan said earlier, a great deal of opportunity in the oil sector and natural gas to take advantage of the seasonality of the period. So I hope that helped a little bit, folks. I'll be in Tampa, and I'll be looking at how to go about fairly aggressive swing trading at the Tampa environment. I've got 3 slots during the 2 days. Stan, that's me all out of fresh air, sir.
All right. Well, that's great, David. One question that came up, David, I don't know if you've got your program open. Edward was asking about how do you get the primary wave on the graph, or where do you see it in the color guard? So if you don't mind, just to quickly show that before we turn it over to Glenn. That was an excellent review and lots of great ideas for our group there.
If you go to timing, and there's the market timing graph, the naked one. If I blow it up to 3 months, and then just go to the drop down and click on primary wave.
Yeah, so the drop down is, it says confirm calls. As soon as you click on it, Edward and everyone, it'll show all the market timing signals.
That's right, yeah. And then it just puts it on the chart. So
awesome.
That's the DEW. That's the DEW. Give a signal there, and then of course you can put the layout on to see the derivation. There's the DEW layout, and that moving average needs to be made a color so we can see it. Change style, make it red, let's say, and there we go. So that's the DEW, and then if I go down the primary wave, there's the primary wave. Get that off. That help?
Hey, that was awesome. All right, we're going to leave it there so we can bring Glenn in, but you've given everyone a lot of great ideas. Just while Glenn's coming in, if you're in oil stocks or natural gas, maybe just type in a 2 and let us know who is looking at oil and maybe giving others who maybe need a little push if the market keeps going up in that regard. Would be excellent to know how many are in. So we're starting to see quite a few 2s in there, including our next speaker, Mr. Glenn Tompkins. Very popular, highly rated speaker with VectorVest, and we're just so delighted, Glenn, you've given us your Saturday to share your knowledge and talk about a little bit about the Jockey Club, and any other ideas and tips that you have for us will be greatly appreciated. So turning it over to you, if you want to grab the screen share and get your mic going, you're all set.
All right. Thank you, Stan. Good morning, everybody. VV Nation, let's get this started off right with me. Let's type the ooh-wees in the room to let everybody know that you're here, baby. Ooh-wee. This is Saturday, and let me tell you how much I love you, Stan. I was in Tennessee with my wife for the last couple of days and said, we can't stay another night in Tennessee where we love it, because we've got to come back. I've got to do a presentation for Stan. So we came back last night to make sure that I was here bright and early this morning. So,
Oh man, that is amazing.
no, it's this is
I'm
be
in your
working
wif's
for-
bad books, but thank you
No,
for
no,
doing that.
my wife is fine. She's a respiratory therapist, so she had a conference, and she said, "Hey, would you like to go? You can play golf." I said, "You had me at you had me at you can play golf." So I played golf while she was doing her thing. So that was awesome. And on the last hole, I birdied 18 after shooting a 101, but I birdied 18. So that makes me love golf all over again. So happy. All right. So with that, thank you for the ooh-wees. Make sure you hit the like button. Let me tell you something. This is my first international forum that I've been to. And man, I've always seen the amount of people that show up and things of that nature. Let me tell you something. Between Stan and David, they gave a lot of great information. And the cool thing is that it's global. Stan talked about the U.S. and Canada. David talked about the U.K. and the U.S. I'm not going to belabor that. I'm going to talk a little bit about the U.S. from a market timing perspective, but they've put so much insight into what's going on in their countries, as well as looking at what's going on in the U.S. And for that, folks, you guys are getting world-class analysis that deserves that like button to be pushed. Absolutely. And the people that we have here, man, there's a lot of people here. And I'm loving this. I'm loving this. Now, Stan, I got to ask you, what took you so long to get me on the international forum? What took you so long?
Hey, we'll have you back much sooner than we had you come for the first one.
Listen, I've seen a lot of the presentations that have been here, and they've been top notch. So I'm thankful that you've had me here. I'm definitely thankful. So as you can see, I'm sharing my screen, and just again, between Stan and David, they did a lot of analysis of market timing. But, I look at the last couple of days, I wasn't really acutely attuned to the market. I know what trades I had. I was able to look at the trades that I had. And I think Patrick did a great job on Wednesday when the Fed came out and raised the interest rates another 3/4 basis points. My 2 cents in regards to that is inflation is still at 40-year highs. There's no ifs, ands, or buts about it, and there's no getting around it. The thing that the Fed has to do is continue to raise the interest rates. And in Jackson Hole, he came out and said that his economic policies were going to cause the economy pain. I don't think it's been enough pain yet. Now, many of you out there may disagree with me, and that's fine. It ain't there yet. I'll tell you why it ain't there yet. Because people are still traveling. If you look at the airlines have record bookings, hotels, record bookings, the ships, record bookings. When inflation really hits, all of those things pull back because people are not taking those vacations. All right, so that's just me in my mind and my thinking that we still have a ways to go. Rumors were out there to help to stir the emotion in people to say, hey, the Fed's going to cut back, so the market's going to go up. And the Fed said, just like Dikembe Mutombo said, not in my house. And right now, he's still going to be, I think he's going to be hawkish, but hinting, key word there, hinting that he may be slowing down. If he does that, if he's really not pushing inflation down yet, even though the raising of the interest rates is a lagging indicator, it's still a lagging indicator. I don't know if he's ready to sit back yet and see what the interest rates are doing, in regards to inflation just quite yet. So that's just my 2 cents in regards to that. But did you notice that as soon as the Fed came out, the market popped? And then after he started talking, the market dropped. And a lot of these things, because inflation is still high, because the VIX, the volatility in the market is still high, we're going to get those big swings up and down throughout the day. So I'm going to start off with the guidance. VectorVest does not advocate buying any stocks at this time, and that's looking at even with a nice up day on yesterday. Yes, right? So one day doesn't make a trend. You'll hear me say that over and over and over again. One day doesn't make a trend. The guidance shows that we're down, primary wave down for 3 days in a row. The confirmed call still down. And this is big for me. Looking at the color guard, all 3 lights being represented tells me that the market is having a hard time finding which way it wants to go. This is going to add to my story about the Derby. We're going to come back to that. So that's point number 1, looking at the color guard. Let's go to the market timing graph. This is the VectorVest composite over the last year, okay? Where does the market in? Outside of these variances, outside of the channel, we're still in a channel. Primary wave, back and forth, up and down, up and down, up and down. This is point number 2, talking about the Derby. So sideways market, more of a trader's market. Going back to the home page, all 3 colors being represented, more of a trader's market. So for those people who are holding stocks long-term, God bless you. All right. And what do you do with those stocks when the market goes through these whipsaws up and down? You hedge. Whether you're buying contra ETFs or playing options or whatever you're doing, for those stocks that you're holding long-term, you've got to have some kind of protective mode in gear at this particular point in time. All right. So as I look at this, those 2 things, looking at the market having a hard time determining which way it wants to go. Oh, one more thing. What's moving the markets and what has been, let's go back to the graphs. What has been moving these markets on these run-ups? 2 industries, primarily in 2 industries only, oil and energy. If this market really has legs to the upside, it needs to be more inclusive than just oil and energy. All right, so just keep that in mind. Now, I set the table for this being more of a trader's market, wherein the Derby comes into play. So when I look at the Derby, I'm going to open up the Derby tool. The Derby tool, for most people think, how many of you, let me ask this question. How many of you honestly feel that the Derby is just a day trading tool, type of 1? If you think it's more than just a day trading tool, type of 2, all right? How many of you, and especially for those people who are now just being introduced to the Derby from what you've heard, how many of you think that the Derby is just a day trading tool, type of 1, if you think that it's more than a day trading tool, type of 2? I want to see how many 1s come up, because this presentation is going to be ideally centered around all of you who think that it's just a day trading tool. I am going to expand the horizons and open your minds to the flexibility behind this awesome tool. Behind this awesome tool. Badger's here. What's up, Tom? Beyond this awesome tool is not just the day trading tool. A lot of people say 1. Now, let me back up again. We use it from a day trading perspective in our Jockey Club. If you look at the top of the Derby tool, it says enter the Jockey Club here. That is our day trading room. And we use the Derby specifically from a day trading perspective in our day trading room. But there's a lot more behind it. All right. So with that being said, let's start to take a look at what the Derby tool has to offer. All right. The reason why I don't have any slides on this, because Stan asked me about it, I want to show you how intuitive the Derby tool is without having to provide you slides, because it talks about what it's all about within the tool, and it's very intuitive to tell you what it's doing. All right. As I look at the Derby tool, this is what it looks like. Why do we call it the Derby? Well, it's like a horse race. Notice how all of these searches, it tracks searches in the software, not stocks, but searches to give you, out of all of the different searches that we track, which searches are doing the best at the time. Because now you can open up that search, look to see what stocks are in there, and start to cherry pick some stocks out of the searches. All right. So as you look, we're not open. So the market's not open now. We're not looking at this live. But you can see that these are all horses jockeying for position. Oh, the Jockey Club. How about that? That's a novel idea. Jockeying for position, the Jockey Club. So that's what this was all about. But you can see throughout the day what searches are on the rise, trying to get to the finish line the fastest. All right. So from that perspective, we can see that on a day like yesterday, looking at today's Derby, what were the majority of the searches at the top of the list? Bearish searches. Well, that doesn't take rocket science to know, what direction the market is going. You can look at a graph. But it's one thing to look at a graph, and then out of all of the searches, let's go to the Unisearch tool. Out of all of the searches that are here, you know how much work it would take for you to go through each and every one of these searches and quick tests from the market open to the current time to see which searches are doing the best. That's where the Derby comes in. It looks at both bullish and bearish searches throughout the day, and it tells you at any specific pinpoint time of the day which searches are doing the best. And then I can open up that search to see what stocks are in that search and see these are all shorting stocks, to see what stocks I would think I would want to short. It shows me the equity curve of all 10 stocks that are found. Now, this is a big question. Do the stocks change throughout the day? No. It finds the stocks from the day before and tracks them during the current days, from the current day's market activity. So these stocks were all found Thursday night and tracked Friday morning throughout the day. So the stocks don't change throughout the day. They still remain the same all throughout the day, but I can see which stocks are going down the fastest throughout the day. What is the sample size of the searches? When you say the sample size, if we move over to the right here, we're looking at all of the searches that tracks. We're looking at 171 searches, Rajiv, out of all of the searches. Now, remember, you'll see a lot of searches will say we make them Derby ready. We put specific criteria in them to make them Derby ready. If they don't have that specific criteria, they will not be found in the Derby. All right, they will not be found in the Derby. But my sampling size out of all of the searches I'm looking at right now is 171 searches out of the VectorVest Unisearch tool and tracking them all throughout the day. I can see the equity curves of the stocks all together. As the market is falling, I can watch the equity curve rise and go like, wow, this search is on the run. Or when it's pulling back, wow, these stocks are pulling down, and so on and so forth. That was sinking sectors too, which finished up for the day about 9%. How many of you would love to have gotten at least half of that, type of one in the room? How many of you would have loved to have been given that information and made half of that, type of one in the room? If you're okay with making a quarter of that, type of two in the room. Folks, that is the purpose from looking at it from a day trading perspective to see what's moving. I want to see how many of you are greedy, because I want to see how many twos go up that were willing to take 0.25% of that. All you greedy folks want to take half of that, you greedy folks. But you know something? That's not a bad thing as long as you learn to temper the greed. There's nothing wrong with greed. You just don't let it overtake you. But Erwin was the only one that said he would have taken 1/4 of it, and that's fine. Now Glenn with one end wants to put in that he would have taken 1/4 of that as well. But that's from a day trading perspective. We're looking at today's Derby to see what searches are on the rise. Oh, now after I called you greedy, now some of you want to type the number 2 in. You don't want to appear to be as greedy. That's all right, like I said. All right, so with that being said, today's Derby, which we use in the Jockey Club, is designed to show us throughout the day what searches are moving to jump on board with the stocks that are pushing those searches higher. Now, you notice that we have the entry price of the market open. We can also look at the prior day's close. That is what we use pre-market to see what searches are moving pre-market up until the market open. What else is here? Price. Now, we have price and average volume. This is especially important on a day like yesterday, on a day, and the day was up yesterday, right? The day was up yesterday, but look at the searches that closed out. Interesting, right? So I like to say, for those of you who know me and know what I like to say about the Derby, what does the Derby tell you? All right, I'm going to wait to see some VV Nation and Jockey Club people type in the room. What does the Derby show you? Before I say it, I want people in the room to tell you what the Derby overall shows you. I know we have a little bit of a delay, so I know that you're going to type in a second, but what does the Derby show you or tell you? All right, I'm going to give a couple of minutes while I drink my Cafe Bustelo out of my VectorVest cup. And here it comes in. That's right. The Derby tells you the rest of the story. Even though the market was up yesterday, the VectorVest tool is showing what searches were making money. That is the difference behind having the Derby and being part of the herd, just looking at the movement of the indices and jumping on board with that. This, folks, is the rest of the story. We have price and volume. So if I'm looking at bearish searches and I'm trying to make sure I've got inventory on these, I'm going to bump up the price to greater than 10 and jump up the volume to about 250,000 shares. I want to be able to make sure that I can find inventory from my broker on these shares. So I want to make sure that the searches are still there, but now all of the stocks that are found, let's click on it again, that all of the stocks are found are greater than $10 and that the average volume is greater than 250,000 shares to make sure that I've got volatility. That I've got liquidity on these stocks. So I've got the functionality within this, especially if I am looking at bigger dollar stocks to invest in because I don't want penny stocks because I invest a lot more money in the market. I can accommodate that as well to make sure that I'm getting into larger dollar, more liquid stocks. It gives you that capability. All right, let's put this back on the all in all. Let's go down a little bit. Minimum stocks found, 10. So when I open up any search, I've got a maximum or at least a minimum of 10 stocks. What if I want to get more stocks? So Rajiv asked me for how many searches we're looking for. Watch this, Rajiv. Let's change this from a minimum of 10 stocks to a minimum of 5 stocks. Now I've got 181 searches. Now, when I open up some of these searches, they may not all have 10 stocks. Most of them still will. But now some of them may have lower stocks. 1, 2, 3, 4, 5. That's 10 too. Let's go down a little bit. Die. Fail. Up. 1, 2, 3, 4, 5, 6, 7, 8. This has got 9 stocks. The purpose behind that is to give me access to more searches that are being looked at to find some other stocks that are moving that may not have been found in just looking for 10 stocks. All right, so I've got the ability to get more of a basket size of searches to look at when I change the minimum number of stocks. I'm going to put that back on 10. Now, how about this as a feature? If I really want to focus in on what's moving, why not, out of looking at 10 stocks, maybe I want it to show me that at least 90% of the stocks are making money in the portfolios or in the searches. Notice how many searches I'm looking at now, 14. These have at least 9 out of 10 stocks making money. Look at that. Now I'm confirming and getting into a better basket of stocks to take a look at. Is everybody tracking me so far? Type a 1 in the room if you're tracking what I'm talking about. Type a 2 if you're a little bit confused. All right. What if you can't short? Well, then, Tom, then I would want to look through this from the short side, and I want to see where contra ETFs are. If contra ETFs are in the top 10 or 20, I would go with them. If they're not, I wouldn't do anything that day. Does that make sense to answer your question? If I don't short stocks, all right, let's go take that winners off. If I don't short stocks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So on a day like yesterday, it was a down day, but contras weren't part of the top 20. on a really good down day, you will see contras migrate to the top of the list. That's the day you take advantage of contras. But on a day where you don't have it in the top 20, you don't take that. Hopefully that makes sense. All right, hopefully that makes sense. Now, Tom, I like Fireblazer's answer is buy puts. But if you're not comfortable with options as well, that's a day you sit still and let the market come to you. All right, that's a day that you sit still and let the market come to you. That's a great question, though, especially if you're not willing or not able to short stocks. I would let the contras come to me within the derby before I do anything. All right, that's a great question. All right, so let's go back to percentage winners, and maybe I'm willing to go down to 70% winners, that at least 7 out of the 10 stocks, are making money. Now I'm up to 28. And it also tells you how many of them are winners, how many are losers. So 2 of them are losers, even though they're losing. Interesting. How are they losing? They're losing. Oh, because this is bullish. Wow, it's losing, but 7 out of the 10 stocks are making money. That means the losers are overtaking the winners. I still got 7 out of the 10 stocks, and look at the equity curve. That equity curve tells me, nah, I don't want that. That's another cool thing about looking at the strategy itself or looking at the search itself is looking at the equity curve. I want to make sure that I'm buying into a search or shorting into a search that can show me that it's making money. All right, that's important. Coming out of the gate, it looked great. It bounced around, and then went. Whew. When I'm sitting here real time watching this, I feel comfortable that the stocks that I'm looking at are pushing this search higher. Towards the end of the day, it started pulling off, not nearly as fast as it was going up. It was holding on to its own and still higher than it was for the morning. All right. So that box right here, the settings box, we just talked about nicely. I'm not going to talk about the deltas positive. That's better shown when the market is open. All right. That's better shown when the market's open than to try to show it now. So that explains a lot of the things that are in the settings. We're going to come back to the settings in a moment. Now, with the VectorVest tool, what would it be if it wasn't VectorVest to put things on a scaling between 0 and 2? We have something called the Derby timing indicator. Now, when I tell you that this is intuitive, you say to yourself, well, what is that? See this blue question mark? Click it. This indicator looks at every price and volume filter in the today's Derby mode, boom, along with the movement of the Dow, the NASDAQ, the S&P, and the VectorVest composite. Folks, it looks at what everybody is looking at, and it puts it on a scale between 0 and 2 so you can see throughout the day if the market is really bullish or bearish, no matter what the indices tell you. Remember, this is the rest of the story. The composite and the advance to decline and how many stocks are going up compared to going down. That's a tool that nobody else has. And there's a lot of people out there. How many of you are day traders? Type of 1 in the room. How many of you are day traders? Type of 1 in the room. Tom says, Glenn, do you actually pick stocks so that the Derby beginner can start out by simply following? Do we pick stocks? We cherry pick stocks. We cherry pick. Jay, stop typing all that stuff. Type 1 number or not. Sigh, Jay. About to put you in timeout in YouTube. I'm about to put you in timeout in YouTube. Don't make me turn this market around, Jay. All right. Anyway, so you do cherry picking, Rajiv. Absolutely. That's the same thing we do in our portfolios is we do cherry picking. So we actually do pick stocks, but once we find that a search is moving like this, we graph the stocks. All right. We graph the stocks, view a graph, and we look at, because this is a shorting search, we would be looking at it when the market opens up and we could see, wow, this stock is going down. And we put in buy points where we're going to buy or sell points along the way. Look at that. Carvana has just been a bad stock intraday. That could have been a great winner yesterday, but the search found it. And then we can graph it to determine when to get in. I like things like the near perfect indicator. I like David's still here. I like and I'm not a fan of Fibonacci's. Yes, I said Fibonacci's, not Fibonacci's. I said Fibonacci's, but I'm not a fan of Fibonacci's. But you can throw these kinds of things onto your graph as you're looking at them real time to see what they're doing. So the tool is designed to show you the searches they're doing or really moving with the market. And then it's up to you to do your own analysis to cherry pick. Because some of these, like this one, this fell hard and then settled in. So now I could have made some money, and then the stock never really took out the gap down. I could have stayed in it. I'd still been ahead of the game. Let's go look at this one. It fell, rebounded a little bit, stopped really trading a lot. Look at that. Then took out the low from the session throughout the day. Folks, the tool is finding the searches, and then you're making. Now this, I probably would have gotten out after if I got in early here with a 3-8 cross. We love to use the 3 and the 8. The 3 and the 8 cross, I like to get out when the 3-8 crosses the opposite direction. Could I have made a profit here? Absolutely. Could I double dip? Absolutely. Could I have triple dip? That's too much dipping. But if you're that aggressive and you want to dip, using moving averages, using the near perfect indicator, using Fibonacci's, whatever you want to use, folks, throughout the day, you can make better decisions. The tool is just finding you the candidates. All right. So, man, I'm just getting started. Woo! Maybe I might have to take 45 minutes. I didn't think I was going to need it, but man, this tool is amazing to the point that I haven't even gotten to the part where it goes beyond just day trading. I'm just trying to show you the intuitiveness of the tool in and of itself. So we take this DTI, looking at all of the indicators, all of the indices, the up and down, the advance and decline and all that, put it on the scale between 0 and 2. I can then tell you which Derby timing indicator, where we are throughout the day. Even though the market was up Friday, we had a stronger bearish DTI than we did for the, hold on, what am I missing? What am I, take that off. We had a stronger bearish DTI. And how about this? Going into the end of the day, 90% of the bearish searches were making money. So where would you have best been able to make money, even on an up day? Look at the bearish searches, folks. 9%, almost 9%, almost 9%, 8%, 7.5%. So the market was up. Let me take this and swing this around a little bit. Let's go look at the bullish searches. So the market was up, right? How about the best bullish search that was out there in the system was only up 3%. How many of you would have been buying stocks long wondering what the flying flip is going on with my stocks not making money? This is where the Derby provides you with the rest of the stories. Folks, everybody out there who doesn't have the Derby is looking at, man, market's moving up. Look at that. 400 points on the Dow, 1.35% on the Russell, 1.28% on the NASDAQ. You know what stocks were moving all of those things? Oil and energy. And that's why, unless you were in those, you were probably wondering why your stocks were not making money on Friday. Well, you know something? I got the Derby. The Derby tells me that. Let's go put them back onto all searches. The Derby tells me that the bearish searches were making money even on an up day. Good googly muggly, folks. That in and of itself is an invaluable piece of a tool to have in your tool belt. Now, I'm not going to lie to you. I ain't going to tell you it's a cheap tool. All right, you got to have real time in order to have the Derby. Many of you are, I don't need real time. All right, fine. Then you don't need real time. But I'm going to tell you why, even if you don't need real time, why you might need to have real time, especially if you're looking longer term. Glenn, 9% is only good if you bought your stocks the day before. Oh, remember, this is not, it finds the stocks from the day before, but this 9% is tracking from the market open. Does that make sense? Fireblazer, these are being tracked from the market open. These are not being tracked from the day before, because at 9:30, all of these stocks are at 0. At 9:30, they might have been found the night before, but come the day of trading, all of these stocks are at zero. They're not being tracked from the day before. They're being found the day before, but being tracked on the day that we start. How do we use the Derby to position trade? Daryl, I'm getting there. I'm getting there. First, let me explain to you what you see on the tool first. I'm getting there from a position trade in a second. About Jay's talking to Daryl. This market takes disappointing stocks out behind the woodshed, even on up days. And you know something, Erwin? You're right. You're right. And that's why this Derby tool lets you know what's going on behind the scenes that nobody else can see because they don't have this tool. All right. So we talked about we have a sweet spot on the Derby timing indicator of 1.2. Whenever either one of these gets to the value of 1.2, you can be rest assured that at that moment, you are on the right side of the market. We're talking about day trading. One moment could be great. Next moment could suck. And then back and forth and back and forth. So I'm going to show you. Put this on, what am I on? End of day. Let's go put this on to intraday, 1 minute bars, current days. This was yesterday's market. High volatility, big swings in the market. All right. Now, if you have the Derby tool and you're looking at intraday 1 minute bars, you will have a market timing indicator called the DTI combo. Ooh-wee. How about that, folks? It will give you a day trading signal. I'm going to say that again. It will give you a day trading signal. When did we get the down call in this indicator? 11:40. Market ran. Look at that. It didn't issue an up call. Let's go modify. Yeah. I don't want to do that. Let's go out. Boom. All right. I can put that DTI on a graph and watch these levels. I put these levels of 1.2 and 1. I can see throughout the day. Look at that. As the market jumped up, we got an up call. The DTI went above that value of 1.2. Day trade. Boom. In. Yellow means sit tight. All right. It means it's not a red or yellow. Then it transitioned. Look how quickly you got into the market to the downside. Boom. Is that a good opportunity to stay short? Stay short. Even though we rebounded, stay short, stay short, stay short. Boom. Yellow means. Now, before the yellow happens, when I see the market starting to take off, and watching the DTI bearish fall, I can get out prior to waiting for a yellow. That's just looking at the graph. All this time, even when the market was bouncing and moving sideways, look how strong the DTI bearish was above my trigger point of 1.2. Have a good day, Jay. Ron says, if you are a green light buyer, you miss out on the daily Derby. Yes. The green light buyer is an end of day trading signal. This signal that I'm looking at now is a day trading signal. I can get the calls throughout the day, and I can watch the movement of the DTIs. Remember, I've got to be on intraday 1 minute bars in order to pull up that timing signal. But yes, from a day trade, we do have that available too. All right. We talked about the summary, looking at all of the searches and being able. I'm looking at the winners though. I'm looking at 29 out of 32 bearish searches making money. 90% of the bearish searches were making money going into the end of the day. All right. That's it from a day trade perspective. All right. So the tool is used from a day trade perspective. It will be able to let you know what's going on throughout the day. Real quick, let me go over these up here. I've got a Derby view, which looks at the horses, looks at a horse race. Split view. I can look at the bullish searches compared to the bearish searches. All right. I can go down to a spreadsheet view and look at them like you would on a spreadsheet. And here's my deltas. Again, I would rather explain these when the market is open to give you a better understanding. But the purpose here is I want to look to find out if a search like No More Mojo It's worked over the last 10 minutes, 15 minutes, 20 minutes, 30 minutes. I like watching the searches, whether long or short, that have positive deltas, percentage changes over the last 5, 10, 15, and 20 minutes, not primarily 30 minutes, but over the last 5, 10, 15. And when I can do that, I can be rest assured that I'm in a search that's on the move. I don't sit at the computer every minute of the day. So, Daryl, I'm getting ready to move over from the day trade side of it now. So, from that perspective, folks, I've given you, I'm going to leave it on spreadsheet view. I've given you everything from a day trade perspective, what's going on. And if you want more information on what the Derby tool is all about, you can always go to the help. We've got videos on the Jockey Club experience. We've got the Derby tour video. We talk a little bit about RoboTrader and using the Derby, and then we've got a quick start guide up here as well. All right. Now, for those of you who are position traders, for those of you who do not want to sit in front of your computer all day long, I've got 4 analysis modes of the Derby, which pretty much back test the Derby analysis to help you guys out. All right. Anybody using a day moving average? I'm not sure what you're asking, Lou. Can you comment on the use of the Derby in amateur before 10 a.m.? What do you mean? Can you comment on the use of the Derby in amateur? Well, yeah, because Knifeman, before we do the Jockey Club, we start the Jockey Club at 9 o'clock in the morning. We do a lot of pre-market analysis before we get into the trading at 9:30. So we do that every morning. Most of us have to work, Glenn says, Fireblazer. Then I got you. All right. So if you go to an analysis mode, click the drop down arrow. We've got 1, 2, 3, 4 analysis modes, which pretty much back test the Derby 4 different ways for you guys who are more position trades. Can you set a stop on the day trade? With your broker, yes, you can. Not here in the software. All of your buy orders, your sell orders are done through your brokerage, not here. Is the Derby indicator enhanced when you have bacon? I knew that had to be you, John, afterwards. Everything is enhanced when you have bacon. Everything. All right, everything. Hey, now that I got that said, it's pronounced Derby, not the dirt. Listen, that's if you live up there in the Northeast. Y'all might call it the Derby. Here we call it the Derby. That's what I got to say about it. Badger says, try the Derby. Glenn, don't you have a trial for $1 or $10? It's, you know, the Derby trial, though, Badger, I think is 30 days for $29. Joey can back me up on that. I think the Derby trial includes 30 days, real time in the Derby for $29. All right, so that is correct. Thank you. I just wanted to make sure. All right, let's talk about these other analysis modes. Now, a lot of people will say, well, what's the difference between today's Derby and day trading mode? Well, I'm glad you asked that. So you want to know about what each and every one of these modes are? Go over to the blue question mark and look at that. I'm going to tell all of you. You probably want to print this. You want to print this if you can. But the day trading mode, in the day trading mode, the performance of each search will be analyzed as if you were day trading the search. As each night, the search is run, and the next day, the Derby simulates buying all of the stocks from that search and selling them at the close of the same day as a day trade, right? And does it over and over and over. So if I'm looking only one trading day, well, that's not going to help me if I'm trying to be more of a position trader. Now, I'm going to show you something that's going to blow your socks off. Make sure your feet are clean and not stinky, because I'm about to blow your socks off. All right, let's go click here on the date on the calendar. And I'm going to take us back as far as we can go. As far as we can go, which is 66 trading days. But those of you who want to know what the market's trend is, you can go through each and every one of these analysis modes. What do you see at the top of the list? What searches? All right. So I'm looking at buying, selling into Vern's Vultures at the open, day 1, closing at the end of day 1. Selling it at the open on day 2, closing at the end of day 2, and so on for 66 trading days. Folks, from selling these stocks at the open and closing them at the close and doing it day after day after day, Vern's Vultures shows me what? A beautiful equity curve from the bottom left to the top right with very little drawdown. Actually, the max drawdown on this doing this analysis shows me it's about 8.36%. Wait a minute. That's about 3 months worth of trading. Stan, 66 days is about 3 months worth of trading, right? I saw you shake your head. Yep.
That is correct.
3 months worth of trading, shorting a search, 8.36%. Efficacy, 27. Total gain loss, 46%. Percentage of winning trades doing this, 52%. Out of all of those days, it made money 60 or just about 60% of the winning days. You want to know from a longer term or a position trade what side of the market to be on? How about those who said, well, you know, I don't want to sell stocks short. Let's go see if I can find what contras have done. Actually, I can sort this by here. Let's go with buying contra ETFs. A little choppy. So you know something? I like that I can at least show you that trying to play contras right now, it's a little hurtful. All right, so that was buying contras. What's the other one? The other one is worst performing contras. Let's go down the list. Let's go see what it looks like. It looks a little better than buying contras. But here's the zero line. Look how much, let's go look at it. It's got a 19% drawdown. Who asked me about the contras? Type of me in the room. Who asked me about the contras? Erwin says, Vern's Vultures performance indicates a pretty orderly bear market over the last few months. Absolutely. Absolutely. All right. Who asked me about the contras? There you go, Rajiv. Look at that. It's telling you from this analysis mode, buying at the open, selling at the close for each day. It's a little tough. How many of you trading contras have felt this? Type of 1 in the room. How many of you who are trading contras have felt what you see right here in the graph? Type of 1 in the room. Market's down, but contras are a tough way to play it, folks. And the analysis is backing it up. On that day trading mode, the analysis is backing it up. So it ain't just you. All right, it ain't just you. It's on that analysis mode. All right, let's take this a step further. Let's go go from the day trading mode to the next one, buy and hold. What does the buy and hold mean? Oh, I'm glad you asked that question. Let's click on the question mark. Buy and hold. Each search will be run once at the start of the date and measured for its performance as of the closing of the last date. This is straight up buying and closing, buying and holding. Now look what's at the top of the list. So if I would have bought the contras on 8-4 and held them into right now, still tough, but it's up 40%. Max drawdown, 23%. That's real. And now I like that. Lou says, I trade contras on a 2 to 3 day timing. But if I'm trying to look at this over the long term for position trades, first thing I see again, what's at the top of the list? More shorts than longs. How many of you only trade stocks long? Type of 1 in the room. How many of you only trade stocks long? Type of 1 in the room. Now, I want to show you something. For those of you who only trade stocks long, and in this bearish market, can I still find you something that could have made you some money during this time period? Well, let's go look at Jubilee. Let's go look at Jubilee. It's not a contra. Let me see what it looks like. Oof. That's a little dicey. Now, buying and holding, overall, you would have made 22% with a drawdown of almost 22%. That's a lot to have to sit through. And this is tough for those people who are trying to be the longer term investor right now. The analysis says, woo, this is tough. And it is. You would have made money, but look at that. Efficiency 33 with a drawdown of 21.5 with a total percent gain of 22. All right. What else is in here? Long. Bottoms up, bottom fishing. Looks just like Jubilee. Lowenthal's Express looks just like this is an example of, in the current market's conditions, it's tough to be long with all of these big drawdowns. What does that mean for you? You need to learn to play options, folks. Stan, do you agree with that?
Absolutely.
And all of these long searches through this analysis are showing some big pullbacks in drawdowns. And many of you are out there experiencing, and the analysis is backing you up, experiencing these pullbacks, and you're like, what do I do? You know, even on the contra side, right? Even on the contra side, we did have a drawdown of 23%. This is why learning how to play contras helps. All right, that's the buy and hold. Now, my next two are pretty cool. Vary the start date. Still looking back 66 days. When you go vary the start date, I'm still looking at an end date of 11/4, but I'm going now, changing the date, the beginning date, 8/4 to 11/4, 8/5 to 11/4, 8/8. So now, running this search over and over and over, just going up one day all the way to the same ending date. What's this all about? What's this all about? Wow. Out of all of these runs, wow, only 2 days it did not make money. Ooh. For those of you who play options, do you think that this is a search worth running to buy puts on? Type a yes or a no. Do you think over 66 trading days, this search lost money twice? Holy smokes. How many of you find that juicy as a search to buy some puts on? Type a yes or a no. Holy smokes. And talking about being on the right side of the market, folks. Now, let me stop a second. How many of you are finding this useful? If you do find this stuff useful and you haven't hit the like button already, hit it now. If you're new to the channel and you haven't subscribed to the channel, subscribe now. Stan does this once a month, folks. You need to be here once a month. Hit that subscribe button, hit that bell icon. You will be alerted every month when Stan does this. I'm just a guy. He brings on a lot of great people. I'm just a guy giving you some insight, and Stan does this every month. All right. Again, if you haven't hit that like button yet, hit it. There's some stuff right here. All right. So, is there anything long I can look at? Let's look at smooth sailing. Smooth sailing out of 66 days. Wow. Now, this is a long search for some of you who are looking for the long searches. Here's a long search that made money 63 out of 66 trading days. Look at that. Position trader, smooth sailing. Smooth sailing. Let's go find that search. That search for those people looking for something long as a position trader, let's go find smooth sailing. Holy smokes. Let's go see what it looks like. Smooth sailing. Sailing takes me away to where I'm. Yeah, smooth sailing. That's in special searches. How about stocks greater than 2? Average shares traded greater than 100,000 shares. So this is not even average volume. This is shares traded. Stocks not equal to a sell. You're looking at the top set. Oh, that's why this is working so much. It's looking at the top 5 sectors by RT, which are what? Petroleum and energy. Huh? How about, wow, finding a search that's in tune with what's moving. And that's why this search is moving up so nicely in such a down market. Wow. The tool is finding that for you. How many of you position traders just went, wow? Type of one in the room. How many of you position traders now just went, wow? Type of one in the room. It's looking, and that's why out of all of these searches, while the market is going down, we just fine-tuned and found you a search. Just found you a search that's making money in the freaking down market because it's specifically looking at the hottest industries. The tool did it. I didn't do it. Stan didn't do it. David didn't do it. The Derby tool did it. Holy smokes. I told you I was going to knock your socks off. I wasn't lying when I said that. I told you I was going to knock your socks off. Let's go back to the Derby. And again, that's one of the analysis modes to see what's working long term. But position sizing teaches us not to put all the, I hear you, Fireblazers. So guess what? In a search like that that's finding the top industries, well, then the Derby tool is telling you that that's what's moving. Generally, I wouldn't tell you to put all your eggs in one basket, but if the basket's moving, take it. Take what the market's giving you. If that's what the market's giving you, you're going to say, well, I'm not going to. Forget that. At this point in time, remember, I told you the only things that's moving the market right now is oil and energy. The search went and found you those stocks. And the tool showed you by back testing it in this analysis mode that those are the stocks that are moving. So now you have to ask yourself, well, do I want to make that kind of money or do I don't want to put all my eggs in one basket? If I already know that the market is focusing on those industries, I'm going to take it. All right, that's the way I'm putting it out there. Throw the baby out with the bathwater. I don't want to throw the baby out I don't want to throw the baby out, just maybe the bathwater. I don't want to throw the baby out. Got to keep the baby. Got to keep the baby. All right, I'm going to take you to one more analysis mode. This analysis mode is the sliding window. And I'm going to change the number of days of hold to 5 days. Oh, you don't know what this analysis mode is? Well, I'm glad you asked. Click on the blue question mark, slide down, and this analysis mode breaks down what it is. All right, breaks down what it is and how it works. Leading industries tell you. I'm all about that. It is up to each user to determine what level of position sizing to use that fits their risk profile. You notice I never talked about position sizing. I'm just using the tool to find you what you need, especially as a longer term position player. That's all I'm doing. All right. Remember when I asked you the question, how many of you thought that this was all for day trading? Now I'm bringing you into the fold to tell you that it's beyond more than just day trading. It's got the ability to help you guys who are the position traders. All right. So let's go see short. Smooth comfort again. Well, we know this is smooth comfort. This is not sailing. So let's go see. This has lost a lot more money. I stay away from that. The analysis says, ew, I don't feel that. Buying Contras is up in the top. Go look at its equity. Let's go look at how many days. Wow. It lost money. See, again, Contras, as much as I love Contras, Contras are tough right now. You know why Contras are tough right now? You know why? Anybody want to give me an answer? And Stan, I'm asking you, I'll ask you the same thing. Why do you think Contras are so tough right now? There's only one answer. In my mind, there's only one answer. Anybody want to type in why they think Contras are so tough right now? Anybody? While I'm drinking the rest of
my experience, Glenn, it's been the volatility.
Absolutely. That's it. No, that's 100% it, Stan. That's 100%.
Think natural gas, Contras.
And you know something? That's exactly right. Because every time those Contras, especially if they're triple leverage, go up, very quickly they come down because the volatility is so high. So yes, it is volatility. And that's why Contras is such a hard way to go right now. And that's why if you look at the analysis that this tool is giving you, you see the equity curves, you see the drawdowns. That's why. And so what does that tell me for all of you guys that are playing Contras? You got to get that extra tool in your belt, if nothing else, to learn to sell covered calls, folks. If nothing else, you got to learn to sell covered calls. Even easier than that is to buy a protective put. Ron does a great job. We've got an options jump starter course you really want to take a look at, which talks about that. But this is, contras. I'm showing you the evidence that contras are a hard way to go. As much as I love them, contras are a tough way to be right now. All right. That pretty much explains all of my different analysis modes. I've given you 4 different analysis modes for those people who are longer term or position traders. How the Derby tool can help you from that analysis. All right. And I think that we've come to the understanding that for those of you who don't sell short, that if you're going to trade contras, you got to do it like a cat on a hot tin roof, folks. All right. So those people, now let me ask one last question. Those people who thought that the Derby was just a day trading tool, if I've enlightened you that it's beyond just that, type of 1 in the room. And if I can get a few 1s, then my job was well worth it to be here today to walk you through this Derby tool. All right. It is beyond just a day trading tool. And the analysis from those different modes really put into perspective what's really going on in the market, because it does give you the rest of the story. Nobody understands that until we do a presentation like this. How the hell you have an up day like yesterday, but the Derby is telling you, but the Derby is telling you the bear searches were making money. Nobody sees that but you guys who have the Derby. Nobody. But how many people out there really know that the market was only being moved by energy and oil? So with that, folks, that's my presentation. Stan, I'm going to ask you, was it up to your expectation? And if it wasn't, you can tell me no.
It was well past my expectations. We've had wonderful participation and comments in the chat. It's been just googly exciting to have you here. As much double dipping as you want, you're welcome to come back anytime. I learned a few things myself. I love the Derby tool personally. I can't tell you how many times it's the DTI tool has shown me that now is not the time to be going long. Just wait a little bit because it's showing what's under the hood rather than what's really, it shows you what's really going on with the market. So some of the tips and tricks you've shown us or how to use it, Glenn, have been priceless today. Very much appreciated. You see the comments coming in, just extremely well done. And with that, I am going to close it off. We've come to the end of our time, but my goodness, what a wonderful presentation. Look forward to sending out the replay. You'll get, the replay is actually available to you right away, but we'll send out the email with David's slide and my slides available for you. But just a tremendous presentation, Glenn. Really excellent. So thank you for that. I'm going to take the screen back for a quick minute, if I can. Let's just see if I can do that. A lot of questions and comments about the Tampa 2-day. How many of you took a moment while the presentations were going on and registered for the Tampa 2-day? Just chat in a 5 if you've already registered, but this is the in-person experience. We have that special $195 price, US dollars, to attend the Tampa 2-day in person. And if you prefer to watch it from your home, just go to the live stream, www.vectorvest.com stream, and you have to register to be able to view the live stream event. But it's just like being there. And this URL gives you the preamble and the all the great information. And there will be a special presentation on the enhanced NPI trading system. So look forward to that. And also, if you're not receiving the slides for any reason, if you've never received them, just drop me an email at stan.heller@vectorvest.ca. It's at the bottom here. All right. With that, folks, thank you so much for all your participation. It really makes it a fun event for all of us, and so great to have David and Glenn with us. And of course, keeping everything running smooth has been Joey in the background, and he gives us his Saturdays as well, and greatly appreciated. So, folks, I think we're well equipped to and well prepared for the week ahead, and know where we need to look for trends and great ideas for stocks to buy and stocks to short. So with that, thanks everyone. Have a great rest of your weekend. Take care.